Hi, I'm Paul Westsells. I'm the president and CEO of Western Copper and Gold. Western Copper and Gold is developing the Casino Copper Gold project up in the Yukon, 21 million ounces of gold, 11 billion pounds of copper. We just brought in Rio Tinto as a strategic investor. Things are looking, and we just announced a PEA last week as well. So exciting times for the company, a very exciting project. And I'm very happy to be here talking to Matt and talking to you, the listeners, as well.
Thank you very much, Paul. Good to see you again. It wasn't so long ago. It was only about a month ago, but you've been busy. We noticed a PEA and also the announcement of a field program. Plus, I want to talk to you about the share price. In fact, we should probably start there, don't you think? When we spoke to you,
Sure.
314. Now at 248. What's happened?
Well, we hit the peak. The timing was great. This was a gasoline on a fire event. Copper hit all-time highs, and at $4.90, almost hit $5. I think it was the next week we announced Rio Tinto makes a strategic investment, and one of the only strategic investments I'm aware of that Rio Tinto has done, and certainly the only investment they've done in a fairly advanced copper gold projects such as what we have at Casino. And then, so on the back of that, right after the announcement, we were up 25%. And then sort of as it trickled through the market, we went up another 25. So a total of about a 50% bump on the back of that news. Then, you had the news that came out, well, China is going to open up their copper stockpiles, and there was some concern about growth. So copper came back and we came back with it. But I'm not too worried. When I look at the copper market, when I look at what we're doing with Rio Tinto, when I look at what we're doing as a company, it's all very, very good news. If anything, this is a great opportunity for people to come in and invest.
So it was gasoline on fire because of the price of copper in the market. It wasn't people's reaction to you doing a deal with Rio Tinto.
Well, it depends. One was the fire and one was the gasoline. It really died. I guess Rio Tinto would have been the gasoline because the fire was really the copper market. Yeah.
Right. Okay. Well, look, it'd be interesting to see how that plays out. Let me ask you: have you had much feedback, pushback, questions thrown at you about the Rio deal in a negative context?
I haven't. I haven't had really a lot of negative feedback on the Rio deal at all. There's certainly been lots of questions, lots of interest in. There's been a lot of interest in sort of how did it come to be. It popped out a little bit out of nowhere. We were talking to them for 18 months before we actually finally signed the deal. And so, what's that background looking like? There's certainly some questions about that. Some questions about, what they're doing right now. And I think we'll get into that as well. So why didn't they just buy you? You've got a project. It had a feasibility study. Now it's got a PEA. It's pretty drilled out. And so, why did they go through this strategic investment rather than just an outright acquisition of the company? So those are sort of where the questions have gone. But as I think the last time we talked, I really think that this is it's a great deal for Western as shareholders, and it's a great deal for Rio. It allows them to come in and do this second level of due diligence, which is important for them. They're a big company. They don't want to waste their money. They don't want to get involved with a project that they don't want to turn into a mine. And we don't, and it helps us, with our shareholders, because to be honest, it gives us a bump with the initial investment, and then hopefully a bump with a further investment, which, should be sometime next year. Okay.
Well, sorry to keep banging on about Rio, but I just, so you're saying there's no negative commentary that you're aware of with regards to the Rio deal specifically. Okay. What is the amount that they put in? Tell us, because it's a lot of money, but it seems to be that sort of the porridge pot of just right amount, as opposed to too little or too much. Because too much would have been probably them thinking, well, or the need for too much would have been, well, let's buy these guys out because market cap is well within tolerance for them. Why 25.6 million?
Yeah, and there's two numbers to look at. One is the dollars, so 25.6 million, and the other one is the percentage ownership. So I'll start with the percentage ownership. It was important for us to keep them below 10%. when you see these investments of sort of 19.9%, I see these investments and I sort of go, why? I mean, because essentially you're buying ownership for 20 cents on the dollar, because it's very, very difficult for any other company that's interested in you to come in and make a sizable investment and to have any sort of conversations with anyone else. When we've got a company like Rio with 8%, we can continue to have conversations with other potential, investors that want to, get involved with the casino project. So that was important to us. The other part is the dollar sign. So the dollar sign, the $25 million, in terms of what Rio wants to do in the program that we put together, it runs around, let's say, around $10 to $12 million worth of work. So that needed to be financed because, again, look at this as a second level of due diligence being done by Rio. So it needed to be at least that. We wanted it to sort of be less than 10%. It needs to be sizable for us to sign an investor rights agreement. So you mix all those all together. I really think this is a perfect size sort of deal. And yeah, back to the, potential negative comment. I mean, what I have heard back is, well, thank God you didn't do that 19.9% deal. Because again, I don't really like those deals because they are sort of, for 20 cents on the dollar, you essentially buy control of the company.
Yeah, you do. And so to come back to the 10% component, do you think you don't have control? You have a significant minority position. Does it put other people off? I mean, who on earth would come in now that Rio's sitting there at circa 10%? I mean, BHP aren't going to walk in. You're not going to have too many suitors, are you?
I mean, I think the thing is that, when you see these sort of investments, it sort of puts you in play. And it's not completely putting you in play. It's not like obviously a full bid. I mean, a full bid is literally putting you in play. But these small investments puts you in play, and particularly this investment, because it's very clear, as I've pointed out, this initial period of work, it's an 18-month period. And at that point, we'll talk about what the next step is with Rio. And that next step is a majority ownership. So there is this 18-month period where really, if you're BHP, if you're our neighbors Newmont with the coffee project, literally, touching our claim boundary, if you're any of these other companies, you sort of need to go in and at least kick the tires and make sure that you've done your diligence on us as an asset to ensure that, is there an opportunity there? And so, that is, what I think is going to happen here over the next year. And with that 8%, if one of those companies goes through and does that diligence and says, it's a pretty good project, and, they're still trading at, 300 million, 350 million market cap, this is a deal, they can make a bid. All Rio can do is counterbid. They don't really have a big, strong position to block that. And that's how we structured the deal, to ensure that opportunity is there. My guess is that we probably just continue along our relationship with Rio. They've been great guys to work with. And then we end up having that conversation in a year, 18 months time in terms of further investment. But you never know. That door remains open for another company to get involved. Yeah.
Maybe. But maybe. Because in all seriousness, them coming in with the why I asked about the amount is because this isn't a typical equity position. This is I'm buying an option of time to validate the work which you've already done, right? They're not going off and doing expansion drilling. This is big enough. There's enough gold, there's enough copper. But we're validating what you've done. We're diligencing what you've done, right?
Hold that thought, but yes.
I know you got
you're 90% correct. But anyway.
I generally am. Generally am. Which at school was great, but in real life, not so much. They're saying we're buying 18 months, and we're going to spend this amount of dollars to validate what you're telling us you've got. Okay, they've got to. I was having a conversation earlier today, and in fact earlier this week, with a CEO who's on the acquisition trail. He'd looked at 35 DFSs. He said 30 of which were misleading and he had to discount. The data isn't always data. It's even at that sort of level, right? So for someone like these guys, they can't afford to make a mistake because this is a big project with big capital commitment or capital requirements, I should say, right? So can you confirm exactly what they're doing in the 18-month period? I know they've got the ability to extend, but would you expect them to extend, or could they get everything they need during this 18 months? I just want to give people a sense of the timing of this thing, because you've been at this a long time.
Yeah. So, and I mean, we actually just announced last week the field program. So, and I'll get into that in 1 second. But if you look at what was very important for us was to capture a full field season. If we had, and we did. I mean, so we announced the deal in May. I mean, before the deal was closed, Rio had a number of people up at our site starting the field program. We announced, and we were dotting I's and crossing T's on what we were going to do. That came out last week. But the idea is that if we can have that field program, literally gather metallurgical samples and do the drilling and get things submitted for assay, by the time all that, post-drilling results, all those post-drilling results are in, then they can, build their business case and come to us to talk about a further transaction. So, and if you look, I mean, this is a press release. It's on our website. I mean, and again, you read through it, and it reads like a due diligence list. There's a little bit of exploration, and so this is why you are 90% correct, because. And this was sort of interesting to me because it is mostly a due diligence list, but I think they've also had a team of geologists looking at this thing for a long time. And like any geologist, they've got a couple like, well, if we're going to be drilling up there, I want to test this and this. And so there is around 5,000 meters of actual fairly true exploration, looking at a couple of targets, particularly on the new Canadian Creek property that we got last year or 2 years ago, I guess now. But yeah, it's geotech, it's metallurgical samples, it's filling in some of the soil sampling so that they have a good idea of what the upside is. It's a bunch of relogging. We've got this real fun machine called this Intersoft machine that, it's this big trailer. We had to helicopter it in, and it sort of scans your core and does all this crazy stuff. And which is it's really, really interesting, some of the results coming out of that as well. And that's, in process right now. That'll run, until really the weather chases us out of there, which is usually sometime in October. And then we'll get assays and results and analysis back on the back of that and then go from there.
Okay. I know my questions are always long and rambling, but I do remember the bits you don't answer. So,
so that's good, because I sometimes remember the question, the parts that you've asked, but sometimes I don't.
So in 18 months, when all this work has happened, they've got the option to carry on. Do you expect them to need to carry on, or is there some
the additional 12 months
at that point?
I mean, the original contemplated 12-month extension was around the idea that when we looked at the timelines, so think of the timelines. We start mid-May. Field program is done end of October. You're going to be analyzed. I mean, if assay results come back as late as they did last year, you're probably not going to have assay results until January, February. And then it's going to take some time to crunch all that. So now you're probably March. So you're at that 1 year time. You have an idea of what things look like. Then you maybe start to negotiate, but now you've only got 6 months, and negotiations can take longer than 6 months. So the idea of it, so why, let me flip that question around. Why didn't you just set it at 2.5 years? Why is it 18 months with an extension? The idea is, if we're talking about a further business transaction, at the 18-month timeline, we'll extend it. If it's like, look, guys, we're moving in a new direction or something else, then it won't be extended. Okay,
now I understand. So again, we've lots of companies come on, they say, Rio Tinto's invested, HP's invested, they've got to invest X dollars per year for the next 7 years. And my heart sinks, because they feel that is done deal. We're done.
Yep.
But what you're saying is you're in a bit more control because of what you know. We should talk about the PEA actually in a second as well. Because of what you know and the confidence levels that you have, you're putting them on a tighter rein or leash in terms of decision making about what they see, and then you've got the contingency period for negotiation of what a deal could look like. That's
exactly
right.
Yeah.
Okay.
Yeah, and I mean, there is an opportunity, I guess, that you can imagine in a year's time where we sit down and they're like, look, we need another field season. And if that happens, then it's a complete new negotiation. Then it's a complete new deal. I really don't think that's going to happen. I mean, we've worked really hard to ensure that what we have for this field season answers all the questions. I mean, we put together, it has been, we've gone from, 50 miles an hour to 100 miles an hour very, very quickly.
What does that mean? Tell me what that means. Because you started talking about 18 months ago, right? So you must have known the sorts of things that they needed from a project. You would have learned that one early on. So you could have worked.
I think the thing is, and it's been really just getting it going. Because we were running out of time. We needed to make the announcement. I can't send a team from Rio up to site and have them sort of start to do a whole bunch of work without that deal in place. So the deal, it got signed probably 2 to 3 weeks later than was optimal. So we really needed to play catch up on that in terms of getting, and this is just really the field season in the Yukon, and the field season in the Yukon sort of starts, early May. If you're careful, you can get in there early May. We got in there sort of mid-May. So we started 2 weeks behind. I think we've caught up. Things are going well, but, getting drill crews, and I'm not sure if you've talked to other people, but it's tough to get drillers. It's tough to get drill crews. It's tough to get soil samplers. And it's not, it's not even, it's tough to find people. And part of this is just that the industry is booming. That's the most of it. Part of it is COVID, and you just can't bring people. It's an internet. It's fascinating to me that drilling is an international business in terms of finding drillers that know how to operate drill rigs, and just bringing those people into Canada is a challenge.
Yeah, it is. Okay, so that's what you've been working on there. So we talk about the PEA, just some of the headline numbers, because a bit of work's gone into it. Yeah.
So we issued a feasibility in 2013, and this is the first update of that feasibility study. So a full PEA updates everything. Why did we go to a PEA? Went to a PEA because it allows us to really look at the resource in more fullness. Headline numbers, and this is at $3.35 per pound copper and $1,600 gold. So like conservative long-term values. You're looking at a 2.3 billion net present value, a 19.5% IRR. So very, very good. If you plug in spot into that model, you run sort of, let's say, 440 copper and gold around 1,800, and then moly up where it is, and silver up where it is as well. You're probably double that. You're close to 4.5 billion in net present value, and you've got IRRs that are in your sort of high 20s and low 30s, and it's where we anticipated that it would be. The other thing that's interesting, and this is why we wanted to do the PEA, is that it allows us to look at the full project and really the first two phases. And so the first phase looks like our feasibility study. It's a little over 1 billion tons. It uses the tailings facility that we have now. The second phase builds a new tailings facility and then treats another 1 billion tons. That brings it up to 47 years of mine life. And this is still, with that 47 years of mine life, a pit constrained by just the measured and indicated. If we haven't, but if we took in the inferred, that would add likely, it's another 1 billion tons. So it's, roughly 1 billion tons is 25 years. So it would potentially add another 25 years. But it really, 47 years. And again, at those conservative long-term values, you're looking at a cash flow over the life of mine of $12 billion. So now you're starting to go, okay, yeah, I understand why potentially Rio was interested in this. This is now starting to talk like, or sound like, a big company mining project with those sort of numbers.
Okay, so but here's the kind of the missing bit for me, and I want you to tell me how I should look at it. Okay, you're clearly not going to build it. It's a big project. It throws off $1 billion, at your base cost for copper and gold and moly of $1 billion in the first 4 years. It's a lot of money, but the capex is also extraordinary. So you can't do it. You need a Rio to come in here. They can do a lot more with their balance sheet than you possibly could. So if, as a retail investor, I shouldn't be thinking like that. I shouldn't be even worried or considering the capex. That's not the game here, is it? You're trying to project how you can get a deal done with a Rio, and then what you can negotiate in terms of, whatever your market cap is today. I don't know, 340, 350 million today.
Yeah.
Where's the upside for me investing now? Yeah.
So let's talk precedents, because you're right. The precedent isn't a company with a 400 million market cap figures out a way to build a $3 billion mine. There's a couple of examples of that, but though, and to be honest, the examples of that have created great returns for shareholders. So, but it's a longer term, it's a trickier sort of path to make. The other path is where you get an asset like this. It's a great asset. You move it forward. You bring in the partner, and then eventually it's sold out. So actually a perfect example is the Rosemont mine. So Rosemont was is a mining project in Arizona. They brought in Hud Bay as actually a very similar sort of story. They brought in Hud Bay as a strategic investor at one point, and then Hud Bay made an offer for the entire project and bought that for $600 million. Another example, and this is going back a few years, but in our neck of the woods, there's a company called Terrain Metals. They had the Mount Milligan project, and again, they sold that for I think $500 or $600 million Canadian. And what's important is that it's always a pretty good premium. And if you look at what your premiums are at the low end, literally the low end is 30%. And there's not much less than that. And then the upper end can be 100%, and that's, where the negotiations come in. So that's an avenue. Another way that you create value is that you enter into rather than it just being a complete buyout, is that you enter into, they buy the asset for a certain amount of money. That money goes into the company, and the company still has 30% or 25% of that asset. And then, the bigger company carries it forward, and you have a carried interest. So those are, if you'd ask me what's going to happen right now, I would say likely it'll be a complete buyout, but it's a year from now, and lots of things can change over that time.
But if you're saying to me, it could be a 30% gain, I'm like, or even 100% gain, you're saying that's good. You'd be happy with that.
With 100% gain?
Yeah.
I think our shareholders would be happy with that. I'd like to see it a bit more.
How do you influence that? Because you're on a date with the guy with the biggest wallet in town. So how do you influence that? How do you make sure it's 100? How do you make sure it's more?
I think.
Have you any levers?
I think the easiest way to lever. And that's a very good question, because, and I'm going to flip that around a little bit and look at this from a different angle. Let's say that Rio wants to buy this asset. What could they actually pay for it? And let's start with what would be ridiculous. They're not going to pay $3 billion for this. They're not going to make any money. They're probably not going to spend $2 billion on this. They're not going to make any money. Could they spend $1 billion on this and still make money? Yeah. So if I can get, there's no reason why our valuation shouldn't be getting closer to that, or closer to a 30% premium equaling that. And it's a fair deal for everybody. So, part of that is what we're going to do in terms of, we've got this PEA out, we're going to turn that into a feasibility study. We're going to, continue to push on the permitting. And what I've seen is that as you get closer to that finish line, and everyone can see a clear path for the project to be, shovel ready. What does that mean? It means it's got an advanced engineering, a feasibility study on it, and it's fully permitted. Then you get closer to that true valuation of the actual asset. Because right now we're trading at about 12% of the valuation on our long-term feasibility study, and 6% of the actual valuation based on spot prices. And so why is that pulled back? Well, part of it is, you got 3-4 years of permitting in front of you. Once a lot of that is happened, then you'll get closer to that as well.
Where's the competitive tension come from? In 18 months, if they lowball you, you go, no, I'm walking away. And they go, well, who to?
Yeah, I think that, obviously if we get a competing bid, that would be the best competitive tension. And everybody wants to be in part of a bidding, the subject of a bidding war. And actually, it's interesting, and just a little story. When I first started with Western, and this is going back to, 2008, 9, something like that, there was a company called BC Metals, and there was a bidding war for an asset that, ended up, and I can't remember who ended up getting that asset, but and now, of course, it's escaped my mind. But
it's a great story, by the way. Good story.
It's a great story, but I forgot the punchline.
Anyway, there was this company.
Anyhow, the last time copper went up, there was a bidding war, and for some of these copper assets, and I'm not saying that that's going to happen here, but that's exactly what we're going to see, or that's what I hope to see. But the other tension is, we're well funded. We've got actually a really good board here moving forward. We are putting together a team to move this through permitting. We'll just march it forward. We can certainly continue to move this forward on our own. Red Chris was the asset. Sorry, to go back to that. It's not going to edit well, but
it's fine. Hey, but this is why I asked you earlier about what can you do to help the process, because if you can get competitive, and this and comes back to one of the first questions, where sort of sitting at 10% of the company, are people put off by that? Would Newmont come walking in and saying, well, what? I think we'll put a bid in here because it's right next door, and it's it meets our strategy for the district, for the region. This is what I'm trying to say. Do you or are you allowed to, whilst you've in this process with Rio Tinto, go and talk to the guys next door?
Yeah, absolutely. And I wouldn't be doing my job if I didn't. And we've got a relationship. Let's be blunt. We've been around for a little while. I've got a relationship with a lot of the big copper companies, with our neighbors, with other big gold companies. All those conversations are happening.